On this episode of Industry Relations, Rob and I wrap up 2022 as Rob and I only can. Let's go.
This is Industry Relations, a podcast that's at the intersection of real estate and technology from an insider's perspective, with Rob Hahn and Greg Robertson.
Hey everybody, I'm so happy to announce our newest sponsor, RentSpree. RentSpree is LA-based and is a provider of award-winning rental software that helps real estate agents, owners, and renters to simplify and automate the entire real estate rental process. From listing to lease, these guys have got it figured out. With nationwide coverage, RentSpree is an all-in-one platform is known for its easy and secure interface and suite of rental tools, including tenant screening, rent payments, marketing, and renter management. To date, RentSpree has partnered with over 250 of the most influential MLSs, associations, and brokerages, and they have over 1 million users throughout the U.S. That's great. In fact, they just announced a deal with the Miami Association of Realtors. This brings their agent count in Florida to over 120,000 agents, with over 600,000 total in the U.S. that is able to access RentSpree through their MLS or association. RentSpree is ranked 625th on the latest Inc. 5000 fastest growing companies list in 2022. Also, check out the show notes for rentspree.com. They just issued a white paper that talks about the opportunities that agents can have by incorporating rentals in their business model. I've written a lot about this. I think it's a great strategy. So please visit rentspree.com to download that white paper. Thank you, Michael, and the entire RentSpree team for sponsoring Industry Relations. Rob and I really do appreciate it. So go visit rentspree.com today.
Hello, everybody, and welcome to another episode of the Industry Relations podcast with Rob and Greg. This is the Notorious Rob, and with me, as always, is the fabulous Greg Robertson.
Hola, Rob. How are you?
Hola. How are you?
Well, I've got a bit of a creaky voice here, but we're going to get through this, I'm sure.
Too much drinking, I would imagine. Eggnog could help.
We had a holiday. We had a party at our house last Saturday, and I overserved myself. And then the next day we went to the football game, and it was. I'm just not as young as I used to be, Rob.
Yeah, what's like my theme song is what's that song? Not as good as I once was, right?
Yeah,
Toby Keith, baby. But I was once as good as I ever was. So I know we kind of did a little bit of this last week with our friends Joe and Greg Fisher, which was awesome. It was fun, and I could see.
I mean, it's been getting great reviews on Twitter and stuff.
Yeah.
So, it's great to see the shout outs from Jay Thompson and some others out there that they enjoyed the show. So that was good. And getting feedback on our predictions, that was great also.
Yep. But I figured we're recording this on Friday before Christmas. And I think chances are next week we're probably not recording one just because it's like New Year's Eve or something. I can't even remember. So this really should be our year-end review.
It's our 2022 wrap-up. Yeah, for sure.
That's right. Well, what a hellacious, crazy year. We've talked about a couple of them already, but I figured it's just the two of us, baby. So let's talk about the year.
Yeah, I mean, I always wonder, it's like, and you and I have been, writing about the industry for quite a long time. I've had my blog out for 15 years. And, being these kind of pundits of the industry, and it just never gets dull, all the things that happen. And every year seems to some sort of drama from going all the way back to the Lions Over the Hill to syndication. Remember that was the biggest goddamn thing?
Man, yeah.
Or Zillow. I mean, it's just every year something comes up. So I just wonder, and it's, here we are.
Now, here's what I'll differ with you. Like, I feel like there's stretches where things are dull.
I don't know. When was the last dull period we had? Jesus.
I don't know, man. Like, I went almost 2 months without writing because there was nothing I felt like worth writing about. But then when you look at the whole year, it's like, oh my God, all this stuff happened. You know what I mean? So you're right. If you look at it over a 1 year time frame, then this industry is just like, this happened, that happened. Holy crap. Can you believe this? But there are some weeks where it just goes and it feels like the only news is some executive appointment and, like just some article on Inman about 19 different ways to use TikTok to sell real estate. It's something crazy like that, you know? It's like,
Right.
But then when stuff happens, like, hey, Open Door lost $1 billion in a quarter. Like, oh man, you know, CoStar and BP. So yeah, you're right. I mean, every year it is kind of nuts. And yet every year it still remains, you know, more or less as it was, right? It's a remarkably stable industry in a way.
Well,
So-
yeah. I don't know. I mean, I guess, you know, maybe it's a little bit of like, we think all this big change is going to happen, and we're all hyping the hell out of it.
And it
At the
doesn't.
end of the day, it has to do with Brenda and Marge, right? I mean,
That's right.
they're just, you know, they keep every year more people use real estate agents more than ever, despite all our pontifications about, you know, doom and gloom or change and disruption and everything else. So you're right on that standpoint. I mean, will it ever happen? Who knows? I mean, good Lord.
So let's get into it, Greg. I know we already did this in the earlier, but you know,
Well, you know, I think what we should start out with is that, you know, recent news is that the Spitzer case has been delayed, right? Is that
Yeah.
what I read?
yeah.
So that's kind of a drag, I think, because, you know, I think we were all looking forward to February where some of the stuff would shake out, and we were thinking that a lot of the other lawsuits were going to wait for that to happen also.
Yeah.
So, you know, it's just kind of a drag to see this one, and they didn't even give a date.
No, they did. It was October.
October. Okay. Well,
Yeah.
Jesus. I mean, that's a whole 2023 not something happening, right? So that's gonna be.
Yeah.
And do you think that the other cases will go forward now and not
Yeah.
wait for that, or what?
Well, so a couple things, right? I don't think we're going to. So keep in mind, I wrote a couple of posts on this, right, about the impact of Sitzer, you know, now called Burnett. But one of my big things was, look, the minute that case gets decided, because I'm pretty certain that NAR is going to lose at trial, just at trial. They could win an appeal, but I think at trial they're going to lose. My thinking is, like, the minute that happens, we're just going to have, like, the plaintiff's bar coming out of the woodwork. You know, because they're going to see easy money. You know what I mean? Like, this always happens when there's a lawsuit that's been decided. Then it's like, okay, let's go after it. You know, so that's, I think, going to get delayed until probably November, you know, December of this year, and then maybe into early next year because you got to take some time to prep, right? Thing is,
First of all, I disagree that they're going to lose a trial. I don't think so at all. But it's just you and me.
let's get into it, man. They're utterly going to lose. They're going to get crushed.
No way.
How do you think they win?
You know, I go back to this, you know, this stat and maybe personal experience or whatever you want to call it of, you know, what is it, like 90% of consumers when they're polled, they would, you know, go use the same realtor again. They had a great experience with that realtor, right? So I think in any transaction, there's a moment where, you know, not everyone, but I mean, in a lot of them, where that realtor came through to make something happen and, you know, made it worth their time, right? I mean, I'll give an example. I mean, and this is a little bit weird, but in our own transaction, as far as when we sold W&R, we'd hired investment bankers, and, you know, they didn't really help. I mean, we were kind of like, they didn't really kind of go, they're not really hired to go out there and shake the trees and stuff. They're more the negotiating. They're when things are getting, you know, bad, they're supposed to help out. And there was a moment where we just kind of walked away, and then these guys showed up, right? And then they made, they earned their freaking fee at that point. And I think in any sorts of transactions, there's that moment where things are about to fall apart, and yet that person's experience connects, or whatever you want to call it, bring it all together. I think there's enough stories out there. I think that there's enough people or situations that NAR could bring to that trial to show, you know, that value being there. I mean, my own opinion, but
It's an opinion. So let me get this straight. So let's take this investment banking thing, you know, as an example, right? So you had a wonderful experience with your investment bankers. You feel like they earned their fee, etc. Okay. Then you find out that they had to take half their fee and give it to somebody else because of some trade organization's rule, right? I don't even know. It doesn't really work for investment banking because their trade organization is FINRA, so it's a government agency. But I just saying, right?
Again, I'm not equating the structure of commission to anything. I'm just talking about I have a representative, right?
Sure.
And while maybe they didn't help me find the home, while they didn't help me, whatever, there was a point there. It was like, okay, this guy earned.
But that's where I'm disagreeing, right? Well, my point is, those agents are not on trial here, right? The agents are not on trial. So the plaintiffs don't have to get up and be like, all those agents that helped you buy a house or sell your house that, we're not saying they're bad guys. We're not saying they're criminals. What we're saying is they're victims just like you of this criminal enterprise by NAR and these corporate defendants.
Well, that's the way that the plaintiffs are going to frame it. But
of course,
they're smart. They're going to bring it back to the human side of things and what that is, right? I mean, they're not going to let it be framed like that.
Okay. All right. Look. So basically, your point is, these 6 regular American jury members, it's a jury trial, right? They're going to be on the stand. The plaintiffs are like, listen, I know you love your realtor. I love my realtor too, and they're great. But fact is, they were forced to overcharge. Not for their work, by the way. They were forced to overcharge you so they could pay the crappy agent on the other side who didn't do anything.
Well, I mean, that's going to be there. I mean, again, if NAR just rolls over and lets that argument and that narrative, go through trial, then they deserve to lose. But I think they're going to create their own narrative, and I think they're going to have a strong case. I mean,
but what's the narrative?
Despite the way, I think if they tap into like the experiences that maybe hopefully positive experiences that people had, and by jury selections, I'm sure they're going to try to find a reasonable amount.
Yeah.
I think they're going to get away from this kind of structure into, okay, yeah, whatever, how people are paid, but this other agent just didn't do nothing, as you said, right? I mean, there is value in all that is, and maybe. Yeah,
but Greg, the problem is if you say, hey, it's not that the other agent didn't do anything, the other agent provided a lot of value, then the problem becomes, if that's the case, NAR, why the hell did you have all these rules?
You want to go in the nuance, and you want to say...
No, I want to go on the law. The law says, hey, NAR and these defendants, you conspired, right, to create these rules that screwed consumers.
Right. I mean, again... That's going to be their argument. The NAR is going to have another argument against it. And, they're going to, I think, leverage the fact that most people were happy with their real estate agents and, and frame it that way.
Oh, okay.
We'll see. I mean,
we'll see.
You want to do a steak dinner on this? We can do a steak dinner.
Sure. Sure. Because when they win, you might be the only one left with any money to buy steak dinners. So...
All right. Anyway, I didn't derail that with our year in review, but I mean,
oh no, people like it when mommy and daddy fight, so it's all good. All right, so I can't remember how this began. I think you were talking about things do change because it's, the delay to October. So my expectation is, that's what it was. What about the other lawsuits? The thing is, like, MLS, so Merle versus NAR that's unaffected by this as yet. All right. I was kind of predicting that Merle and Burnett would get merged. It hasn't happened. So it's possible that happens. In Burnett itself, it's not like they're just delaying it for the sake of delaying it. There is a very important thing that is going to happen in between, which is the Court of Appeals has to hear this thing from, I think it's Home Services. It might be Realogy.
Right.
Saying, why are we at trial? There should be arbitration. Right. The trial court was like, no, this has nothing to do with arbitration. This has to do with, it's an antitrust case against you all as a conspiracy, not against the commission, etc. But the 8th Circuit might take a different stance, right? So that's something that might happen. So we'll find out what the circuit court says about that. One of the interesting and important things I think in that is going to be, just like happened with PLS versus NAR, I think it's not the decision of the circuit court, I think, that's going to be as important as versus what the Court of Appeals says in justifying their decision, if that makes sense. right? In other words, the Court of Appeals and PLS reversed that, right? And then threw it back to the trial court. It's like, no, this case can't be dismissed. Go retry this case. Which was a shocking outcome. But to me, what was more interesting was what the Court of Appeals said about the facts and about the case when they threw it back. Because what it showed me, what it said to me, and again, this is just my opinion, it really felt like the Court of Appeals was very strongly taking the plaintiff's side, very strongly taking PLS's side, right? Which could be important. So we'll see what I think it's the 8th Circuit in Missouri. We'll see what that Court of Appeals says by October, because they'll have made that decision long before October, so that the trial can recommence. There's a case that we don't talk about. I haven't read a whole lot about it, but fact is, MLS PIN in Massachusetts is getting sued on very similar grounds. So that case is unaffected. That will continue to go forward. And who knows, something new could get filed between now and then, right? Like all of the broker-owned MLSs aren't part of any of this, and it's because they're not part of the NAR. But if MLS PIN's going to get sued on the similar grounds, like you guys created this conspiracy, these rules to, overcharge people, then clearly someone's going to be able to bring that lawsuit against Northwest. Someone will be able to bring that charge against FMLS, against other broker owns. So I wouldn't be surprised if we see lawsuits like that, depending on what happens to PIN. Rex.
It's a bummer. Again, it was going to be in this first one we talked about was going to be in February. Mm-hmm. And,
right.
We would probably seen something, a few months there, maybe before the summer.
Yeah.
What I worry about is like in this vacuum, it's just uncertainty. Everybody's imagination goes wild. And I'm worried about the industry. Like, what's going to happen? What's going to happen? And that's been happening a lot, is that kind of like, not panic, but just, uncertainty and people making decisions based upon things that they imagine might happen, right?
Yeah, but I think that's a good thing, Greg, right?
But basing decisions on facts you don't have yet? I don't think so.
I think that's the whole essence of prepping. And I think, so in other words, like let me rephrase, okay? I agree with you, like you shouldn't go and start making decisions based on things that haven't happened yet. Like you shouldn't dramatically alter your life or your business or your company based on stuff that hasn't happened yet. But I do think it's smart to do some things. Again, just like prepping, right? Like, okay, there hasn't been a major power outage in Southern California, right? It could happen. So I'm not saying you should go and like move out of your house or, build your own generator. Maybe that's going too far, right? But to say, you know what, we should have some extra water, I'm just saying prepping. I think one of my concerns, and I wrote about this, is I don't feel that the local associations, the MLS leadership, I don't believe most of them have even thought about this. I think the bigger, like better operated MLSs, ones that we probably know, I know for a fact that they've been like telling their directors, telling their leadership, hey, here are some things that are happening. We just need to think about it. We don't need to do anything immediately. They're not saying we need to immediately drop cooperation compensation or anything like that. They're just saying, here's what's happening. We need to think about it. And they have some real intelligent dialogue because let's face it, realtor leadership, they're not dumb people necessarily, right? So, okay, so if that happens, what's our thing? How much legal exposure do we have? I mean, they're having those conversations. That's smart.
Yeah. I mean,
they should do that.
Prepping is good for sure. Yeah. I mean,
they should do that.
But let's, just not, go overboard. But
agreed.
No,
agreed. And I think that is the right approach. Think of what realtor associate brokers, agents, what everyone needs to do because of these things, exactly like prepping.
Yeah.
Right.
And maybe this is a better thing because, as our experience at the Greater Las Vegas, that's a great show.
Yeah.
Well, I think the associations and MLSs, a lot of staff are thinking about this. It's very clear that the agents on the streets, working for a lot of these, smaller brokerages are not, right? So this extra time might be a little bit good for
Yeah. Like I said, man, my concern is not the agent on the street working for small brokers. My concern are the boards of directors, like committee members. I don't think most of them know what's happening. I don't think most of them have thought through any sort of contingency plan. I don't think most of them are prepped. Right. So really, to me, this is something I've been just talking about and talking at the industry for 3-4 years now. Like, just embrace a little bit of the prepper mindset, right? Again, that doesn't mean go overboard. It's like, hey, I'm worried about the prospect of nuclear war, so I'm going to sell everything I own and move to a bunker in Idaho. Like, that's stupid. That's panicking. That's going too far. But saying, hey, I'm worried about this, that, and the other, so I'm going to have a little bit of additional water, maybe have some of those, like, the survival foods handy, maybe have some medical supplies. Like, that doesn't seem like out of this world, nuts type of stuff. And I think that's kind of what I'm saying. At least the leadership of locals should start thinking about some of these things and start prepping a little bit,
Right.
So that's obviously so I guess, in a retrospective way, Burnett probably is one of the most significant things that has happened, right? The fact that it got certified as a class action. So presumably next year, one of the biggest, we're not doing predictions, but man, when Merle gets certified as class action, holy shit. That's gonna be another one.
But if we look back, at 2022, I don't think there's any argument though that the biggest thing was just inflation, and then
no doubt
that affected the markets, and especially interest rates, where the acceleration from, let's say 3.5% to 7%, that slope, that change in interest rates, which is the fastest as far as moving of a rise in interest rates, or any move up or down, has ever happened in 40 years.
Yep.
That just messed everything up, right? I was just talking with, Drew Meyer over, at the gym.
Yep.
What he calls. We did predictions last year, and, I think one of my predictions was there's going to be another shit ton of acquisitions this past year. And that all just got completely on hold because, as Joe Rand had said, all the public facing real estate, entities, those stocks just went down. So they just made everything just, put a freeze on everything. Right. So you saw some companies get some funding, our good guys at Rent Spree, our sponsors, did get some funding.
Yep.
Some others went out there, and there were some things that launched, but overall, Jesus, what just winter was coming, and winter was here for 2022 on the acquisitions standpoint.
Yeah. There's no doubt, and look. I'm no fan of the Fed, right? I want to get the hat that says audit the Fed or end the Fed, because I'm in that camp. But neutrally, just looking at it objectively, I think one of the things that this 2022 made perfectly clear for anybody with eyes to see is real estate is a zero-sum game, and it's driven entirely by macroeconomics, right? So, like you and I have had this conversation in the past where I talk about, look, how hard an agent or a broker works does not increase one additional transaction, right? That's all macro. That's all interest rates. That's money supply. That's employment. That's the Federal Reserve. That's, it's the Treasury. It's like the bigger economic forces. How hard a broker and agent works affects what share of the pie you get.
Share. That's a great way of putting it, for sure.
Right. But the size of the pie, how big or small it is, almost entirely macroeconomics. And I think we saw that 100% in 2022.
Yeah. And I forget who kind of said it was the 4 Ds, divorce, diamonds, diapers, and death.
Right.
Right. Diapers meaning, you have a new family member, you get a bigger house. That's always going to happen in any market, but that's kind of the base of the pyramid, right? So as you go up there, the rest of that kind of thing is really driven, like you said, by macroeconomics there, for sure.
Right. And I think so, this year has been horrible. I just think Jerome Powell, the Fed, I think they're making a ginormous mistake. But whatever.
If real estate is one of the bigger drivers of inflation, and they can't cut that down, how else do you kind of, if you, it's just like when a company has to kind of, cut back. The first thing they cut back to is their biggest expense, which is employees, right? I mean, if these guys are trying to cut back inflation, the first thing they got to look towards is those bigger things, and the biggest thing is real estate. And when you had situations where, you're getting 20 bids on something and something was going over $250,000 over asking price, plus they were going to promise to name their first child after the fucking seller. I mean, things are a little bit wacky, right?
Yeah, but I guess it depends on your perspective, right? I'm an Austrian, I'm a Milton Friedman guy. So for me, it's not housing didn't drive inflation, right? It's the other way around. I think inflation drove housing. So what caused all this inflation in 2022? It's pretty fucking obvious, right? It was Donald Trump and his whatever $1 trillion bailout, at COVID, and then Joe Biden followed that up. So it's both parties. It's not like,
It's both parties, yeah.
It's always, and this is one of the things, like, people want to make it like, thanks Joe Biden. It's like, well, the first guy to do the big COVID rescue thing was Trump, right? So basically, to me, it's not housing is some big driver of inflation. Government spending is the big driver of inflation. And government spending funded by the Fed printing money, like, that's what's really caused the inflation. And then the inflation drove home prices. Like, all of a sudden, all these people had money. Like, oh shit, right? I'm going to go buy a house. Right? And then we had the work from home thing, which caused the whole great reshuffling. So there was like this perfect storm. I get it. So because of that, like, the Fed's going to come out and say, we're going to raise interest rates like to the sky and just kill off housing because that's somehow going to handle inflation. No, man. What you need to do is stop buying treasury bonds so the government doesn't have any fucking money to spend, and then home prices and the rest of the economy will eventually stabilize. Now, that's my take as like an Austrian economics guy. Like, if you're the Keynesians, then you think I'm crazy. You think this is all about animal spirits and what we need to do is kill demand and blah, blah, blah. Like, all right, we'll see. We'll see how it plays out. But having said that, there's no doubt 2022 for us, to me, I've started writing this phrase, like, we're in the Jerome Powell market, right? We live in Jerome Powell's world and we're just living in it, I think it was clear evidence that you could have the best idea, you could work your ass off, you could have the technology, this, that, and the other thing. And you should, because it's going to let you take share, but the size of the pie has nothing to do with our industry. It has nothing to do with what we do, day in, day out. And it was kind of a real sobering, holy shit moment, right? And it's,
there would be, weird circumstances like the pandemic. I do think that was a new thing that did increase the pie, but those are, 100-year flood type of things that happen, right? I mean, nothing normal.
Yeah, I suppose, but that's why you see the money supply do this, right? At the same time, didn't Senate, like yesterday, they just passed a $1.7 trillion spending bill? Like, where's that money coming from? Like, it's going to be one of those things. So the idea that inflation is going to be tamed because housing is, a major contributor, I'm like, you got reversed, right? Inflation won't get tamed until the fucking government stops spending money. When is that ever going to happen? Not in my lifetime, probably. It's one of those sad situations. So the implication then looks more like this going forward. And I know we're not supposed to be doing a whole lot of going forwards, right? But the way I kind of see it is, I don't think, I mean, everyone's predicting home prices to drop. Yeah, home prices are going to drop somewhat, right? But why are home prices dropping? Because people can't afford to buy. Like, you've essentially eliminated buyers, like enormous chunks of buyers out of the market, or you've made them unable to afford, the house that they really wanted to buy. So they have to settle for whatever, some smaller, crappier thing. Okay, I guess.
Or the rental market increases too, right?
But the rental market's going to go absolutely fucking insane, right? I don't know how else to put it. Like, because having a roof over your head is it's not optional, right? So
it is.
We'll see.
I mean, this Jerome Powell market. I mean, going back, the interest rates being as high as they are, that puts a damper on the real estate stocks, which go.
Everything.
That means that that the leadership has to be ousted because there's got to be some sacrificial lamb in each one of those types of things. Some of those things are going to be probably delisted or stop going altogether. Look at Compass and look at OfferPad. That means that all the infrastructure that supports that organized real estate, as we call it, you've been seeing the massive layoffs that have been happening all over the place with Zillow and CoStar and everything else.
Yes. Yeah.
That means, the ancillary businesses, obviously mortgage, title, all that thing kind of, I mean, it's just the biggest, winter walkers that have entered into this landscape that have chilled everything.
No doubt.
Going here. So we're going to get down to, and I'm not sure exactly how quickly the base of realtors are going to drop. I mean, a lot of people are saying it's going to be just flat, not that many, and then they're just going to have this, 10-15% drop towards the end of the year. But who knows? I mean, if it's just, people got to go find real jobs in a sense, maybe they're going to let their association and MLS membership kind of lapse or whatever. I think that's to me still the unknown of how, because one of the things, and this has been screwy lately, but in times where the market has gone down in recession, NAR's membership has gone up because typically a lot of people would lose their job and like, oh, my brother-in-law makes a lot of money in real estate, I'm going to try that. But we've had such an up cycle for so long, I think longer than 10 years, that, that now it's in the, now the cycle is turned. Is that same logic going to happen if people lose their jobs in a recession coming up? Are they going to look at real estate? I think if you look at the media, and they've been just talking about how the real estate market, I mean, even, ridiculous stuff that you and I know are not true, but still the average consumer is being fed like that from the media, right? So, that to me, that's the kind of question that I have in my head. All these things that you're saying are, based upon this thing. How does it affect the number of agents, going forward in next year? I know we don't want to talk too much about next year.
Yeah.
That's like what's the over and under on that, right? And how quickly is that decrease or increase, as I said, going to happen?
I mean, I think next year we're not going to see much of a decrease, if any. Right. Because if you look at the last time the bubble popped, there's like a lag of about a year. Right. And it's exactly because the way that Realtor Associates MLS is charged, right? They typically charge once a year, right? And then people pay and they're like, well, I've already paid, might as well stick around, right? It's just that the next time those bills come due, they're like, yeah, I'm out. I haven't done any deals this year. So we saw that about roughly a 1 year lag last time, the housing market really collapsed. So I think it'll be the same. So I'm not expecting a huge drop next year, right? Year after we might see, 20-30% drop, depending on what happens to the housing market overall. Like a lot of folks are thinking that we're going to see a 30% drop in volume next year. Right. And we talked about it on our show with Joe and Greg. On current trends, 2022 is going to come in at about 4 million homes sold. Right. Which is like, that's really bad. So if we see a 30% drop from that number next year, dude, you know what I mean? We might be under like 3. Like,
I was looking at Ryan Lindquist's Twitter feed right before we got on here. The SAC appraiser, great Twitter follower if you're into this. The charts and graphs he comes up with are fantastic. But he was saying that, I guess, number of units, not pricing, but 35% down from last November.
Yeah.
I mean, that's fucking crazy. Right?
Yeah, I believe that.
Yeah.
I completely believe that.
In Sacramento, right?
Yeah. I completely believe that. So if we see that level of drop in numbers, again, I don't think price is going to plummet 30%. It's more the transaction counts.
Right.
Then by the end of next year. So whenever like the MLS and association dues are due again, I think we see 20 to 30% of agents leave at that point. But I don't think it's going to be next year.
Right.
Yeah. Yeah.
And then, but so what do we think? Well, let's talk about also what we saw this year happen though, right? It's like there's a lot of moves made at the end of 2021. And I'm thinking about CoStar, by making the acquisitions that they did with HomeSnap and Homes.com.
Yep.
Zillow getting out of iBuying, right? And then that's leading into 2022. Then this chill comes over the market. I think, we haven't really seen, the fruition of the super app from Zillow yet, right? We're hearing these little things pop up every now and then. We haven't really seen the new Homes.com. We've seen some of the acquisitions, like, my own company, Lone Wolf. But now, what is the final vision of that, right? What's going to be there? So I think, I'm wondering, I know from probably my standpoint, the market hasn't really chilled the progress we're making or trying to make. It's tough. And probably that's the same thing for CoStar and for Zillow. But I think 2023, we should see some of these visions of all these acquisitions materialize, right? So
yeah.
So
Good
I
point.
think in this year it has been kind of a grind to get through this and everything else. But what I worry about is that with the depleted and depleted staff and all these things, that a lot of people are going to put those grander ideas they had in 2021, on the wayside and just hunker down for 2023 to get done with it. And that would be a shame, because I'm really looking forward to seeing some of the changes of, and then, I left out exclusives. Exclusive was launched last year or this year.
Sure.
Right. So, I mean, there's a lot there on the side right there, just about to be kind of bloom. Right. But,
sure.
And again, that's just another effect of the macro market of putting things on a big chill on everything. And that's a shame.
So I'll agree that I think there's going to be a chill, and I think people are going to get into sort of a batten down the hatches mode come next year because of what happened this year, right? All of the stock market, the housing market, the economic slowdown, all of that. I mean, I agree that's going to happen. But I'm reminded of that Warren Buffett quote, where he talks about, like, get greedy when there's blood in the streets, right? So, like a little bit of a contrarian, like, be fearful when everyone else is greedy and be greedy when everyone else is fearful.
Right.
I think there are some companies and some individuals who have money. They're not in a batten down the hatches mode. And I could see some of them getting really aggressive next year while everybody else is in hunker down mode, and then end up crushing because of it. And specifically, I have in mind Andy Florence.
Yeah, I'm going to say the same thing. I mean, of all the personalities I'm thinking out there in the space, there's only one person that matches that personality, right?
I think Eric Wu could be that guy too.
Listen, I shudder to see what their Q4 financials are going to look like. I mean, I don't think this $1 billion loss is, I don't know if it'll be $1 billion, just because, the number of transactions.
Let's say it's another billion. Let's just say they lose another billion Q4.
They're at like $1.06 this morning.
So
yesterday, I mean, if they fall below $1 for a short amount of time, they could be delisted.
Okay, so they're delisted. So what?
What do you mean, so what? That means that cuts them off from access to a lot of the public markets money, and then probably the covenants they have for all the debt they have could go away. You can't be an iBuyer without a bunch of money.
Who knows? I don't know, but I do know they have, like, I can't remember. Even Q3, even after the $1 billion loss, they had significant capacity.
I'm very bullish on them. I like the team. I like the model. Everything. But I mean, I'm just saying. I mean, it's
no, I know, Greg. What I'm saying is, I think what I saw from Eric, especially after the Q3, okay, lost $1 billion, launched third-party exclusives, and then he says, "Hey, Carrie, take over as," I think it's Carrie. I think that's her name. He went to the CFO and was like, "Take over as CEO. I'm gonna go run Marketplace."
Yes, makes sense, totally.
I'm saying, so I would just address the personality side. Like, I don't see that as somebody who's operating out of fear. I don't see that as somebody saying, you know what, oh my God, we lost $1 billion. We got to hunker down. Like, I see that as okay, we lost $1 billion. Like, things suck. This year sucked. But hey, you know what? Next year, everybody else is going to be pausing. Everybody else can be hunkering down. We're going to get aggressive. I'm going to go drive this car even faster. And he has enough money. Like, okay, you get delisted. All right, fine. I mean, it's not like he's able to get credit now anyway, even if he's listed. It's not like there's a whole bunch of banks and companies wanting to, put money into Open Door anyway, he's got enough cash where he could go full step on the throttle and show, everybody else, hey, third party marketplace is how things are going to work. And I could see him doing that. That's all I'm getting at, right?
I know, I get that. But I mean, I was listening a little bit of the new Datadog.io podcast, and Tyler, Tyler's got some concerns over there, right? With,
of course,
the fact that they're not really buying that many homes.
Yeah. And
that really turns down the funnel. Unless they're hoping that this launch with Zillow is going to bring, that's going to fuel their acquisition strategy. But he's concerned that if they don't implement on what their core model is, the exclusive things just dries up, because to me that's creating the inventory for exclusives, right? So, I mean, a lot of questions out there. I mean,
a lot of questions. Yeah.
But I think you're right in the fact, if I look down and, like you said, if we're looking for the double down guy, the guy that's going to be contrarian and everything, I think it's Florence for sure. For sure.
All I'm saying is I want to put Eric Wu in that mix. I would actually maybe think about putting in that mix is Glenn Sanford.
Right.
Right. I mean, he doesn't, he's such a mild-mannered guy, so people don't think in those terms. But I could see him like, he's got money. He doesn't have any, I don't think they have any debt. He could look at this and go, now's the time, right? When everybody else can be slowing down, now's the time, pedal to the metal, let's go for it. The other guy who I think has that type of personality potentially is Gary Keller. Right. I could see him saying, oh, everybody's terrified, now it's my time.
But again,
I could see
back
that.
To your thing of like, for those companies to succeed, especially in the model Gary Keller and AXP, it's all number of agent driven type of model, right? So, as we said, the pie isn't getting bigger, especially now.
Right.
So you want to create a company that brings in even more agents, right? That's how he grows. That's how he goes double down, and it's creating competition for the existing agents you have to get everybody's going to have a smaller bit of that pie. Maybe some other. I mean, I think you're right. Mindset wise, I just don't think they have the model, unless it comes up with a different model to kind of to double down on. You know what? I'm going to grow to 110,000 agents next year. Or what, okay. I'm not sure what their thing is. I mean, how does that happen, and how does he make those people stick? And
so
notoriously, those guys always have the least producing agents, the EXPs and the Keller Williams, right?
Sure. So yeah, I'm not saying this is going to happen. I've already made my predictions as to what happens to Compass, but just as a experimental thought experiment to illustrate this notion of aggression, right? If Gary Keller next year says, "Oh, you know what? Everyone's hunkering down. Whatever. People are terrified. I'm going to go buy Compass." Right? Something like that. And you're right. Like Keller Williams, their existing model, it's about agent headcount. So he says, "Fuck it. I'm just going to go spend $2 billion, right, and buy Compass." Like, to me, that would be a super aggressive move, right?
Right.
That if it happened, like, I'm not predicting it's going to happen. What I'm saying is it wouldn't shock me, because I feel like that's the type of aggressive, like, get greedy when other people are fearful personality that I think Gary Keller has. Right. Again, same thing with Glenn Sanford. If Glenn Sanford was like, "Hey, I know we're EXP, we're this low cost virtual model, blah, 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 but boy, the timing just feels good and I've got the money, so I'm just going to go buy Compass. I'm going to go acquire all these brokers who are terrified and they're hunkering down, they're losing. Like, all this, I'm just going to go acquire them.
Offices and buildings that.
Yeah. Who knows? Right. I'm just getting at, like, it's the Warren Buffett thing. It's also one of my favorite quotes in recent years. Have you heard this? Good times create soft men create bad times create hard men create good times. Yeah. Right. And I'm like, who are the hard men in our industry?
Right. No. Well, the larger point there is that, and the overall arching thing, what you're saying is that, anybody is, you don't see true character in good times, right? You see a man's and a woman's true character in hard times. And we're going to find out, another, I think, Warren Buffett quote is when the tide leaves, you see how many people are not wearing pants, right? So we're going to find out the companies that can persevere through this. that can either grow or stay afloat and get ready to fight the next day. For sure. I think next year is going to be all these kind of wild prop tech companies that we're going to do this, and that, are going to fade away. And, we're going to see what these new and that's what I worry about with some of the leadership changes they make, especially on the Wall Street side. Like, are they just getting rid of good leaders that could be the ones that could bring us through this kind of this downturn for the sake of like answering Wall Street that could have been great leaders during this kind of time?
Could have been, but if I don't feel like the type of leaders that hard times call for give a shit.
Right.
I think if one of them were, let's say, a senior vice president somewhere, and because the CEO is terrified and hunker down time, I'm going to get rid of that's SVP. Like that SVP is like, fuck it. I'm going to go start my own thing, whatever, because they're hard men,
Right.
And they're the type of people that hard times, call for. So we'll see. But, it's interesting. Like who else, maybe, our listeners could tell us like who else they see as the type of, sort of hard men and hard women, that are going to get aggressive and get greedy when everybody else is running for the hills, Right. They're probably names that we haven't mentioned.
Yeah.
Because we know they're out there. We know like Asian teams, there are a bunch of team leaders who are going to get real aggressive when things are really shitty because they'll be like, now's the time. And they're going to do great. They're going to just, they're just going to double their business probably, And then all the ones that are running scared, terrified, like, what do I do? They're all, there might be the ones who are leaving the industry come end of 23.
Yeah, that
we'll see.
We had guest Ryan Castle from Cape Cod who had said, looking at the numbers, like there's a group of 8% of agents that were kind of controlling a big portion of the market in his area.
Yeah.
And then COVID came and that went to 4%. So that power consolidated, right?
Yeah.
So there's that kind of opportunity out there as well. Yeah.
Yeah. So I can see that happening. All right. So what other super important thing from 2022?
I don't know. I mean, again, I thought there are some, based upon 2021 and 2020 with all the acquisitions, I guess I put myself in this camp. There's a lot of founders of these other companies that are coming off their, time period that they have to kind of commit to those companies. Mm-hmm. And it'll be interesting to see what these guys do, whether they're going to stay on, whether they're going to start something new, or they're going to kind of chill out next year and take a break or what, into that. I'm firmly still going to be in the mix. I'm still, I think with where I'm at, it's a good platform still. I'm interested in I still love the industry and I think I can contribute, but, and the other thing is I just don't have a better idea right now. So, once I get a better idea, then I'll kind of explore that. But I mean, I'm very interested to see what the market brings and how we're gonna get through this. I look at talk to vendors all the time and like, what's the strategy next year to kind of get through this. So that's a little bit.
I have so many ideas. I have so many ideas for you for your next venture. Can I tell you my latest one?
Okay.
The latest one is a combination of a dating site and a rental platform. Okay. So you would have to go on a date.
Okay.
But you have to live in the same apartment, like together for like, a month. Okay.
So you have a bad date and then you got to live with that person for a month.
But so that's what I mean. So you take a month, and if there's a bad date, then one of the two of you decides to stay and pay the rent. You know what I mean? And then the other one leaves.
Okay.
There's got to be a way to work out rentals with dating.
Right. I mean, I don't know. I mean, I'm not sure. Back in the day, if all the people I dated, I want them later on to know where I live.
So it's not where you live. It's you're both looking for a new apartment. You know what I'm saying?
Okay.
And then you meet on this platform and decide to swipe right? And then you go find the apartment together, kind of deal. Okay. And then depending on
that would certainly go with the trend, and I'm always surprised by this of of younger people now buying homes together before they're married.
I think it's the most insane thing I've ever heard. I know,
but it happens all the fucking time.
I know. I'm like, you're fucking crazy. You know?
Yeah.
Oh man. Well, good for you, Greg. I can't wait to see what you end up doing next year. Oh, you know.
Well, I'm here. I'm in Lone Wolf now, so I mean, we'll see what happens. But I mean, that's the commitment now.
No, what I mean is like you might be one of the hard guys. You might be one of the hard men, where Lone Wolf gets on this like super aggressive acquisition path because you're like, hey, now's the time to get greedy. Do you know what I mean?
Yeah, I mean, I wish I had that much influence. I mean, so we're owned by a private equity firm, so
Sure.
Those guys are driven by, from what I can see, giving returns back to, their current investors, right? So as far as their long-term thinking, I don't know. I mean, I don't know if that's their strategy. I hope so. I mean, they've made some big moves already, so we'll see if they can make some bigger moves.
We'll see. Let's see. For me, the other retrospective, there are two things that, happened. There was no direct impact, but I think they could end up being ginormous impacts next year on the world, really, which means on the real estate industry and housing, because we're part of the world. And the two things, one is obviously the war. When 2022 began, I did not have Russia invade Ukraine like on my list of things that were possible. Do you know what I mean? It just wasn't. But it happened, and here we are, and now we're funneling hundreds of billions of dollars to Ukraine. And I'm like, okay, whether you think that's a good idea, bad idea, whatever idea, the fact that it's going to have an impact on our economy, I don't think can be denied. So we'll see what that ends up doing.
Though, like, on that, and maybe you know better than I, but I didn't really think about it this way. Aren't they just spending that money at Northrop Grumman and Boeing and
maybe
McDonnell Douglas? I mean, to me, it seems like, here's some money so that you can buy these Patriot missiles. Here's some money that you can buy these, other things. I mean, it seems like it's like this kind of a round trip transaction in a sense, right?
Sure. All I'm pointing out is, imagine $200 billion being available to build new housing.
Right.
It's not available, so therefore, maybe Northrop Grumman executives will buy and build some new houses for themselves. But, in terms of the buyers who are now shut out of the market, I don't think that's going to change a whole lot. The other thing, though, and this is one that only like weirdos in like sort of FinTwit, it's sort of the alternative economic analysis people pay attention to, but it's something because I'm part of that community, so I pay a lot of attention, is maybe because of the war, because of all these things, more and more countries are selling their oil for things that are not US dollar, right? So, there's the recent meeting between Saudi Arabia and China, where it is Saudi Arabia is now going to sell oil to China in renminbi, in yuan. There's, I think it was either Nigeria or it was some African oil producing country saying they're going to sell their oil for gold. But basically the petrodollar system is sort of starting to get attacked, right? And I watched that super carefully because so much of, as we saw in 2022, the American housing market is dependent on mortgage rates, which are dependent on bonds, which is dependent on the US dollar. So if the petrodollar system starts to be shaky, we could have a situation where like American mortgage financing might become even harder than today, is what I'm getting at, right? It hasn't happened yet, but it's a development in 2022. Very few people have watched, and I'm watching like, oh shit, like that could be really bad, right? Because if somebody's issuing dollar-denominated debt and nobody wants it, then what? It's like, but it's not the Fed. Like the Fed's not buying those bonds anymore. Like somebody's got to buy those, and the petrodollar's intricately connected to that. And I'm rather concerned about how that plays out. But that was a huge development in 2022.
Yeah, that last thought there, Rob, was probably the most Rob Hahn thought I've ever heard. Okay.
What?
Petrol debt to ratio to gold. Oh God, I have no idea what you're talking about. But that is so you right there. It's like, okay, I wasn't concerned about how, people are paying, not paying dollars for money for oil now, but now it's, NFT trading cards and gold. And
They're not the same thing.
Fucking thing.
They're not the same thing.
I'm chiding you a little bit.
I know, but that's why I'm pointing this out. And let's put it this way: in our industry, where else is anyone going to hear about petrodollar and its connection to U.S. mortgages?
That is exactly true. That is so true. Yeah.
So from that standpoint, yes, I accept the chiding, the criticism, but like I said, since we're doing a retrospective, we hadn't seen that before. I'd never seen anything like that before. And, the reason for us to be concerned is if the petrodollar system collapses, then we can't issue mortgage bonds to foreign buyers. The Swedish pension fund or whatever, they're not going to want to buy U.S. mortgage-backed securities as much as they did, do now. Right, which then means rates have to go up in order to attract the type of investors to want to put money into the U.S. mortgage bonds. Yeah. And we've already seen what the impact is when mortgage rates are at 7. Like, dude, if the petrodollar scheme collapses, we could see mortgage bonds at 15. And then what? It's one of those things.
Yeah, I know. I've got, hold on. Just make a note of this to watch out.
I'm telling you, watch that. We don't want people buying oil for anything other than dollars.
Okay. Noted. Man, I don't know.
God, we're both coughing up a storm over here.
I'm telling you, man, it's been a rough year. This last thing, I mean, you could catch 4 different goddamn, viruses, and none of them could be COVID, right? I mean, Jesus Christ.
Whatever happened to COVID?
It's around. It's my nephew. Was it my nephew or who? No, one of the kids in my wife's class. She teaches 5th grade. About 30 kids, and I think one of them got COVID. So it's still out there, but Jesus. What else? I mean, let's talk about that a little bit. I mean, I know we're kind of running out of time here, but this post-COVID, not even post really. It's just like this pandemic haze, right? That we're kind of in, I think. I mean, that's, what does that mean? I mean, it's like this thing where I think a lot of the companies are still, we talked about this before. Are people going to go back to work, right? And I don't think we really saw a lot of that happening this past year. Next year, are people going to go back to work? I don't think they're going back, but I mean, there's still a lot of companies there's still a lot of media about like people, companies wanting, people to come back to the office, right? But I don't know. I don't think so.
I don't know. I'm kind of split on it, right? I'm kind of split on it because on the one hand, we have like Elon Musk demanding that Twitter employees report to the office. Is he the only one? I don't know. Right. I mean, I have heard when the whole COOF thing first popped and people were talking about work from home, that a lot of the traditional boomer bosses were like, what are you talking about? Right? What is this work from home nonsense? I expect you in the office. Until the government came and said no one can come to the office. So with those guys, who kind of grew up in like kind of Mad Men era, who are used to coming to the office and putting in their 16 hours a day in the office. Yeah. Would those guys, go back to, no, like none of this work from home shit, like come to the office? Or I think actually Andy Florence doesn't allow work from home. I'm pretty sure CoStar does not do that.
We talked about that because he has to. I mean, that's, it's like, one of us not using a realtor or something, right?
Right. So
that's his bread and butter is those.
Yeah. So I could see a lot of companies saying to their employees, hey, if you want to keep your job, come back to the office. At least 3 times a week or something like that, right? I could see that. Depends, I think, on what happens to the employment environment next year. Right. So there are a number of people who think we're going to see just mass layoffs. Just utterly insane mass layoffs. If that happens, then I could see a lot of people saying, I have to go back to the office. Right?
Yeah.
But if that doesn't happen, if we don't have, 8% unemployment, maybe those workers go screw it. I'll get a different job. Now, what's going to be tough are those laptop people who move to different states. Like you work for Facebook, but you're in the middle of Ohio somewhere.
Right.
Those people are going to have a tough time if Facebook's all of a sudden like, hey, we need everybody back to the office. Like, well, then I bought a home. I bought a 20-acre farm. Who knows what happens. But so I think a lot of it depends on employment, like, the level of employment strength. All indications right now I don't think employment is going to be super strong, no matter how much the Fed and, Bureau of Labor Statistics lie to us. I don't think any workers feeling like, man, I'm super confident I could get a job tomorrow. Like, I don't get that vibe at all. Right. Obviously you have exceptions like the super high end, engineers and, brain surgeons. Like, yeah, those guys are fine. But, the average worker, I don't know. I don't know. Right.
Yeah. And
having said that, the counterpoint though is this, and I think we kind of talked about it in the talk with Joe and Greg, is if I'm a company owner, do I really want to spend the millions, tens of millions on office space? Do you know what I mean? Like, that's the countervailing, right? Because after salary, occupancy is usually the number 2 biggest line item. It's the biggest expense. So if I don't have to, do I really want to do that?
Yeah, it's going to come down individually to each company where
correct
productivity is
correct.
there. If there is a measurable amount that they think of getting more productivity out of them by being together, I think they got to make that call. But that's going to be tough.
Correct.
In the technology community, it's going to be very tough to kind of measure. So we'll have to see. We'll have to see.
And that's why I think Elon is such an important figure in a way, because if he is able to show that Twitter employees who are now left, because he fired 70% of them, 80% of them, right? Like the Twitter employees who are left, who are now coming to the office, they're way more productive than the Twitter of last year or even earlier, this year. Then I think a lot of other tech people are going to look at that and go, oh shit, we're going to follow that lead.
Yeah.
Right. If not, though, if there's no measurable productivity gain, then I think all those guys will be like, screw it. Why am I paying, $30 million a year for this, office space, right? That doesn't even do anything for productivity. Like, I think that's an important experiment to see over the next, couple quarters. So,
well, I can say for us, and maybe we can start wrapping here. It's been great. I know 2022 for me and Rob here, Rob really kind of he came to me and says, he made a commitment, like, we want to record every week.
Yeah.
And, to do that, we had to hire, a company to help us do that. There was these Two Brothers Creative that really helped us out here. And having that consistency and having, his leader, Rob giving me that kind of like, let's do this, I know has been great for us. It's been great for getting our podcast out there, and all the tweets and the texts and just people coming up to me at conferences and everything who enjoy the show and enjoy listening to us and yelling at us. I want to say I'm totally grateful for all you guys. I have a great time with Rob doing this. I love you, Rob. I mean, Merry Christmas to you. And I really also want to do a shout out to our sponsors this year. We got our first sponsors this year with starting out with Note Router, Nick at Note Router. Thank you so much. Obviously, with Big Russ over at Ernest did everything for us and also sponsored a couple times. And of course, Rent Spree, which has been our last sponsor. We're looking forward to having new sponsors next year, but I'm just it was a big turning point for industry relations last year, or 2022. So thanks to all the listeners out there and everybody, all the lovers and haters out there. Appreciate it.
That's right. And I would echo that as well. Like, it's just, and I guess if we're going to, not just us and our decision to do this every week, but our listeners, and people are watching us on YouTube, like, for them to keep doing that, listening to us like yammer on and bullshit. Like, I really without them, we don't have the sponsors. We don't have this. We don't bother with any of this. So, I'm always appreciative of the audience, for giving us their time and their attention, and, yeah. And I'm always appreciative of you, my friend, cause, I do my own podcast periodic and I haven't done one for months and months. And I realize a big part is I don't have you. It's not as fun.
I have the same thing
talking into the microphone,
Yeah.
Whereas this has been one of the times of the week I really look forward to the most. So do want to say thank you and, Merry Christmas to you and your family as well, man.
All right, man. Yeah.
All right. Well, with that, peace, joy, goodwill to men on earth. Thanks, everybody. And we will see you next year because I think we don't have a recording next week. We might run, just music videos or something. I'm not entirely sold on what we're going to do.
I'd like to run previous popular videos or podcasts. We'll see.
We might, but, once again, thanks, everybody. And we will see you all next year.